So in today's section, we look at for an aspect of the performance management. We'll look at standard costing and variance analysis. That is the topic. We call it standard costing and variance analysis. That is today's section, variance analysis. So standard costing and variance analysis. So today's section is in two: standard costing on the other hand, and then the variance analysis too on the other hand. That is the section. It's a very topical section where we need to pay maximum attention to. But I'll list all the areas and aspects that we need to look out for. Good. Then we move on. I'll start with the standard costing and then hit the variance. Before that, this is another control section. It's a management function that talks about control. So it's about the control. How to do the managerial process? We said that the managerial process starts from where? Costing. So management accounting starts from costing. That's where we look at the cost accounting techniques, the advanced one. Number two, from costing, then we have planning. And we have controlling. So far, that is where we are now. And then we have performance management. In fact, I'll go to decision making first. Then we have the decision making. And finally, the last managerial process is a performance management. That is a bit tough. Performance management. Good. That is the. So today we are looking after the controlling aspects of the managerial process. The controlling. That is so. The planning is about the budgeting, controlling is about the variance, and then decision making is about the short term, both short term and long term. That is also the paper I want to write is just about five, talking about five issues. The costing, that is ABC, activity based costing, throughput. All those ones are costing. Planning, the budgets. Then the controlling, variance, decision making, short-term decision and long-term decision, the investment appraisal and goal. Then the performance management. Now let's think of the control out and then let's talk about control. Now when you talk about controlling simple means making sure that you are achieving your objective. So control simple means setting an objective, making sure that you are achieving objective. So control have only 3 steps. Tell examiner, Mr. Examiner, control have 3 steps. The steps, planning and controlling move together and decision making. So the steps in planning, when planning ends, controlling continue. When control ends there, decision making follow. So planning, control, and decision making. Now, the steps in controlling, we have number 1, set an objective or set a standard. Set a standard. or objective for yourself have a goal, have a purpose, have a vision, have a target that need to be achieved. That's the first step of controlling. So if you want to control yourself about something, you need to have a purpose, put your mind on something. So your professional career, you should have a purpose. Okay, within 5 sittings, or within just 4 sittings, or 3 clear sittings, I should be able to finish what is expected of me. That is all. Okay, so basically, that's the first stage. So that's the standard costing, assuming that it's about predetermined cost, or it's about costing, then we need to set what's called a standard cost. You can have a standard revenue, a standard unit, a standard something, standard. And it's not only cost that we have standard cost. You have a standard revenue. Everything you can add standard to it. Can you add your name and add standard? So target. For target, it also means standard. So if I add 2 issues, so let's say Fred. So standard Fred. Everything. Add standard to name. Let's go to step 2. That is done now. After setting the standard, relax. You measure and record the actual. Measure and record the actual results. Okay, we've set a target for ourselves that we need to do this. Already go in right after the actual. Take accurate measurements, take accurate records of the actual results so that you can compare to what? The standard. So the step 3 of the controlling process is comparing the actual to that of the standard and report all variances and take corrective measures where necessary. That is all. So report the variances between the standard and the actual result. The third examiner reports all variances between the standard and the actual results and takes corrective measures when necessary. Now, all what you need to know is this: the step 1 and step 3. In the exams, the theory question will come in the step 1, like the last sentence question. In exams, the theory questions will normally record understanding. The calculation, the analysis, the variance analysis is the step 3. And now the good news is that the examiner will give you step 1 and step 2. For the variance, you have to find it. Or when they give you step 2 and 3, you have to find the step 1. So in okay, the examiner has to give you 2. You have to find 1. So 2 against 1, always. Standard versus actual, you find a variance. Standard versus variance, you find the actual. Actual versus variance, you find the standard. That's all. Now let's look at the standard costing. We said that standard costing is just an aspect of the control function of management, where you need to set a standard and measure and record the actual, and then report variances between the standard and actual, and take corrective measures. Now, let's start with the standard cost. We can have what you call standard cost card or standard profit or loss. The word standard cost simply means a predetermined cost, or predetermined estimated costs. That is all. So let's start with the standard cost. So the word standard cost simple means, like I said, add standard your name. Predetermined. So standard cost simple means predetermined or estimated cost. So predetermined or estimated cost. So before we go into the actual production, we should determine the standard cost. We should determine the cost in advance before we go into the actual production. Normally, we use it for inventory valuation and for control purposes. So never explain standard costing without giving reference to what the control. Because if you have a target, it will help you to measure your performance. Because if you don't have any targets, anything goes. You cannot tell whether you are doing well or you are doing bad. That is all. That is all. Good. Now, it is important for management to determine the standard costs. Very important. What are the standard costs? We can also have what you call standard cost card. Relax. If you know the actual cost card is same. So if I'm going to prepare a standard cost card, when they ask you to prepare a standard cost card, that examiner. Standard cost card. It's the examiner. Standard cost card simple means is the cost coming from the standard or predetermined data. So just be adding. So standard direct material cost. So much. Just everything standard direct labor. So much. Standard direct expense. So much. So you get standard prime cost. Everything. So you're just picking it from the standard chart. Now, the question is this: why should management want to prepare a standard cost? Why? Obviously, to assess what standard costing, the standard cost stuff gives rise to the standard costing. Now, let's critically look at the importance of standard costing or uses of standard costing. The standard costs have two uses that have several importance. How we get it? So the standard costing have two uses, and it have many importance. So let's look at the uses of standard costing, in which we can point it around to the importance. And no wonder in the previous exam it was asked. Good. So uses of standard costing. Uses of standard costing. Standard costs have two main uses. Two. But the important are plenty. Number one, to value inventory and cost of production. To do what? To value inventory or inventory. Inventory. Good. To value what? Inventory and cost of production. As an inventory valuation, the stock sheet will have FIFO, LIFO, weighted average. We also have standard price. Standard price. So that is it. So that's the first uses of the standard costing. Second one, it acts as what control device. So for controlling, or act as what control device, or for controlling. Act as a control device. That is all. Now I'll add some few points to it, then we turn to the importance. Let's go to the importance of standard costing. It's basically the same as what we've determined here, just that I'll go a bit further. I'll go a bit further. Now, the importance of standard costing as well like this, it's used to probably value inventory, cost of production, so you can maybe get 2 points from there. For controlling purposes, for performance measurements, motivation, and also provide direction, basically. So that is the importance of the standard costing. That is the importance of the standard costing. That is the importance of standard costing. Basically. Okay. So basically, that is the section. Basically. Now let's look at some few issues about standard costing. Some few issues that the challenges that we have with standard costing. Okay. Now, the standard costing, the challenge that we have with the standard costing is this. It sometimes serves as low morale for the employees. Yes, so it serves as what? It demotivates the employees. Standard costing sometimes demotivates the employees. For instance, the management by exception approach normally focus on the usual variances. Meanwhile, management often focus on unfavorable variances while ignoring the favorable one. You know, sometimes if the employees work and then there's some little drawbacks in their work because the mere fact that they've not been able to achieve the standard set before them, they've done something. So the little they've done, you need to applaud them and tell them, okay, you've done well, next time you go higher than that. But if you say, you've not done anything. Now, as a result of that, workers might believe that poor performance gets attention, whilst good performance is ignored. Because when they do bad things, in fact, you mentioned it for everybody to hear, forgetting that at least they did some good thing, but the bad have covered all the good things. So therefore, you having a standard deter the morale of the employees. That is the first negative section of standard cost. Now, the challenge we have with the standard cost is this. We're supposed to report all variances. So point number 2, no reporting of certain variances. We don't report all variances. Not all variances are reported. Good. If management only investigates unusual variances, workers may not report negative expectation. Oh yes. So if the workers have control over the reporting, they may report in line with the expectation to avoid danger. So this is where it leads to what? Manipulation. Standard cost might lead to what? Manipulation by workers. Why? At all costs, our aim is 20,000. So no matter what, whether it's rain, it's shine, you must get a 20,000. So even if we are getting 18,000, oh, we just have to duplicate some of the figures so that we can get the 20,000. And then we're not going to report on the actual. That is it. So these are the few challenges that we have with the standard cost. Good. So the few challenges that we have with the standard cost. So we get a nice question for you, which pop up just immediate setting. Very good for solving. Very good for solving. That's question 4B. So question 4B. Just the immediate setting. Question 4B. Question 4B. Explain 3 good news and 2 bad news of standard cost. Good news and 3 bad news. That is the good news are inventory valuation, production, cost of production, valuation, control purposes, performance, measurement, motivation, or self-direction. But the bad news is that it turned out to demotivate the employees because they will only be praised if they do well. For instance, look at the stars, the Black Stars, or look at the football team. They will play hard, score some, of course. Other teams also will score them. But if they were not able to win the trophy, in fact, it's the same as they don't go at all. Awards are given to those who be on top. So it motivates those that were not able to climb up to the award stage. Or we don't say that, oh, forget about management. They only praise or they only talk if bad things happen. But sometimes this team that were not able to climb up to the award stage, so they could, in fact, they perform even better than some of those that went to the award stage, basically. But it was overlooked. So basically, that is the challenge that we have this now. So can you try this particular one? How to prepare a standard cost. Now, example 1. Using the above information, draw up a standard cost card for the Joe. Example 2. What would a standard cost card for product Joe show under marginal system? Now, if you are preparing standard cost card, everything must, don't pick anything from the actual. That is all. Standard direct material, labor, the rest, everything the same. So I just pick it from standard. So blocks makes one product, the dough. Two types of labor are involved in preparation of a dough. A skilled and semi-skilled. A skilled labor is $10 per hour, and semi-skilled is $5 per hour. Twice as many skilled labor hours as semi-skilled. Twice as many skilled labor hours as what semi-skilled labor hours are needed to produce dough. 4 semi-skilled labor hours have been needed. So tell us the hours required, both semi-skilled and skilled. But they say twice as what many skilled labor hours as what as skilled labor hours are required, and the semi-skilled labor is what 4. So the skilled labor will be what? Who tell us? I like that sentence there. Anyhow, so skilled labor will be what? And semi-skilled will be what? Okay. So twice as many skilled labor hours as the semi-skilled. Okay. So basically, if one is 2, the other one will be 4 twice. So you just double up. So now that they have 4 semi-skilled labor, what about the skilled labor? Skilled labor will be 2, because if semi-skilled labor is 4, skilled labor will be 2 twice. So dough is made up of 3 different materials: 7 kg of material A, 4 liters of material B, and 3 meters of material C. And then that material costs are also there. Everything, you just have to arrange them in that order. And you find the selling price if you read downwards. Okay, so I'll continue the scan. Move on to say that variable production overhead are incurred the block score at rate of 2.5 that labor skilled are. A system of absorption cost in its operation. A system of absorption cost is in operation at block score. The base of absorption is the direct skilled hours. For the forthcoming accounting period, budgeted fixed production overhead will be $250,000, and budgeted production of the dough is 5,000 units. Administration, selling, and distribution overheads are added to the products at a rate of $10 per unit. A markup of 25% is made on dough. You can only calculate the cost card and proceed to calculate the selling price if possible. We are using absorption. Absorption uses the full cost. And then the second example, look at the variable. And that is all. You look at the standard costing process, and then basically that is it. Now let's look at the types of standard that we have. Can you take note of this? It has been asked before. It's asked them to explain the big two of them. So I write them on board for you, the type of the standard that we have. Type of standard. We have types of standard. Number one, if there are 4 types of standard, we have what we call ideal. How can you ideal standard? Number 2, Number 2 talks about attainable standard. Attainable. Number 4. Attainable. Number 4 talks about, number 3. Current standard. Current standard. Apply. Then basic standard. Basic standard. So let's pick all of them and then just say something small about it. Ideal standard simple means I normally call it notional standard, attentive. Now, this standard is based on perfect operating conditions. It's a standard that could be achieved under perfect operating conditions. That does that mean? Standard that could be achieved under perfect operating conditions. That is it. Perfect operating conditions. Meaning that no wastage, no idle time, no machine breakdown, no factory breakdown, and then no production inefficiencies. No inefficiencies. Good. In fact, this standard is sometimes difficult to be achieved. Cannot be achieved. In fact, employees believe that these goals are unattainable. They can't achieve it because they shouldn't even relax. No wastages, no idle time. So when they come early morning, if they need to complete that work, until the work is done, they don't have a relaxed time. So basically, let's go to attainable. Attainable, as the name suggests, attainable is a standard that's based on the hope that it can be achieved if we allow for inefficiencies, operating inefficiencies. So it's a standard that can be achieved when we allow for 1, wastages, 2, inefficiencies, 3, idle time. So unlike the idle, for that one there's no idle time, but over here there's what? Idle time. Basically, current standard. Current standard is a standard that consider the current working condition. Current working condition. So if I set a standard and then I include the impact of COVID, it becomes what? A current standard. Current standard reflects the current issues, current working condition, current operating capacity. It's not like 1983, since 1983. Using the same method today. Today there is current standard, okay? Yes. Now the one, basic standard. Basic, as goes with basic school. Now it's a standard that kept the same over a long period of time. It's basic. A long period of time, the standard is the same, unaltered. And that is it. So on that note, we are done with the standard cost. What level is that's more question there that you need to scan through for us. Now let me go to the variance. To measure and record the actual, I'm not give it to you. I will draw up the variance analysis for you. The variance. Now let's see. Now it shows all the advantages and then the bad news about all this, because you may be called upon to explain any of them. Yes. you may be called upon to explain any of them. So be on standby, okay, when I don't ask you. We are going to variance. When you talk about variance or variation or deviation, variance, variation, deviation. What does that mean? Variance is the difference between the standard result and the actual result. That is all. Variance is the difference between the standard result and the actual. We can attach to any result at all. So for instance, if you are expecting, let's say, 75, one of your papers, it dropped and then that. It did massively well, but it didn't able to achieve your dream. So you had 75. Sorry, just the variance will be what? 10. So basically, I'm going to list all the variants that apply. We have, the elements of cost. There are 3 elements. We have material, we have labor, and we have overheads. All of these have variances. Material have 2, labor 2. This one 2 plenty. So I'm going to draw the diagram on the board for you. Take your time and absorb it. When I'm done, I'll list all the variances that you need to know. I'm going to calculate them, and then we see how best the good Lord bring us. So when you take the variances, you can also have what you call cost variances. That is what we are starting first, and revenue or sales variances. So let me pick the cost variances first and talk about them. Then I'll come and pick the revenue, because the cost variances are the crucial ones. You need to control cost by revenue there, maximize it, minimize the cost, and then maximize the revenue. So total cost variance, total production cost variance, total production cost variance. It's like this. It is made up of what? 2, 3 items. Okay, so what are the 3 elements of cost? So we have material, we have labor, and we have production overhead. Production overhead. Now, when you take this to labor and material 2, we also have 2 sections. We have what you call price, the price. And then we have usage. Again, when I click the labor 2, I'll have 2. I'll have what you call rate. So it's a rate per hour. This is price of labor. Labor is not an item that we can sell on the market. Labor is not an item like a material. So labor have rates. We don't use labor. We hire their piece of their time. So we cannot say usage, no use labor. We call it efficiency in terms of our hours, how efficient they utilize the hours. Okay, so we have efficiency. That is it. Then we go to overheads. Now the overheads will be divided into two at the basic stage. We divide it into two. We will have variable overheads, which will subdivided into two again. How do you get it? We subdivided into two again. Variable. In fact, let me do that one here so that we will have an item like expenditure and efficiency. And what? Efficiency. You know, all of them, and a material, we call it price, and a labor, we call it rate. The price version is rate. And a variable production overhead, we call it expenditure. Basically. Then we go and pick the fixed production overhead. So fixed. Now the fixed, let's look at the fixed carefully. Fixed to have two. At the basic stage, fixed have two. So the fixed production overhead have two. The first on the list happen to be that of the expenditure, and then we move on to the volume. Good. So the volume and that of the expenditure. So this would be like this. I'll write the volume here first. So volume will step down again, and this become expenditure. Again, the volume will be divided into two again. Yes. First, we have what you call your capacity and your efficiency. Now, kindly take note. These three guys, it came May 2019, called Ghana guys. So can you check that question? They ask them on its own. So when you take volume, the volume, we also call it productivity ratio. It is made up of the capacity times the efficiency. Capacity ratio times what? The efficiency ratio. That will give what you call production volume ratio or productivity ratio. Now, so far, what we have on the board is called primary variances. Primary variances. These variances are original, they are fundamental. Then we can combine some of them to give a secondary variance. The first secondary variance I'll talk about is the material. I can also divide material into two, the usage into two. I'll have the mix. So material mix variance. Material mix variance, and I can also have the yield variance. I get it. So this one's is called secondary variance. So these are the variances that we need to calculate. Now, the variance calculations are not all that difficult because I have a strict principle that states that expected, actual, you get your variance, just three-step approach. Expected versus actual gives us the variance, basically. Basically. Okay. So we will start calculating all this. Okay, so let's see. So I'll pick a question. Our first question will illustrate all these primary variances. We put it aside. But before that, I'm going to list the so the first one is for us to know the primary variances. So topics that we should read are sections or the areas that we need to look out for. So the subtopics. Number one, we should know how to calculate first all the primary variances. So number one, we need to calculate all the primary variances, especially A, cost variances, B, sales or selling price variances. Sales variances. The sales variances are only two. That's the good news. Cost variances are many, as you saw from the diagram. That's the first you should know. If you know this, you are fine. Number two, right from there, you should know what you call operating statement. Operating statement. Meaning that how to reconcile the budgeted profit with that of the actual profit. The difference between the budgeted profit and the actual profit is the variances that cause that. It is the variances in the cost and the variances in the sales revenue that cause the difference in the budgeted profit and the actual profit. These are the topics so that if you want to read further or advance, make sure that look at this. Today, right from here, I think we will look at the first section. The sales variances are only two: selling price variance and what? Sales volume variance. Operating statement, you have two types. You should know under marginal cost system and then under absorption. So let's look at absorption first. I'm listing everything. Absorption, and then B under what? Marginal. Good. So under variance analysis, item number 2 that you need to know or you need to look at it carefully. We call it work back reverse. Right after the reverse, then and we hit the reverse or work back or the reverse. Take note. It came in 2017 May, and around 2018, in fact, it visited us. Work back or the reverse. Now, the reverse worked like this. Instead, the examiner giving us, it said that standard cost have 3 steps. He said the standard, You set the standard. So 1. You set the standard. 2. You measure and record the actual and then the variance. But let me read here. We need number 1, the standard. Number 2, the actual. And number 3, we will calculate the variance. In a reverse or workback, we will give you the variance and ask you to produce either the actual cost card or the standard cost card. That's the reverse. Settings that came so far, we've had 3 questions on this, 3 settings. The main one came in May 2015. May 2015. Good. That is where we had reverse. And from there, May 2017, in that order. That's area number 3 that we need to look out for. So before you go and sit for your exams, make sure that all these areas, you solve questions under them, one after the other. So you pick all primary variances under cost, you are fine. Sales, you are fine. Operating statement, absorption, fine. Marginal, fine. Workback, secured. Then you go to number 4, that is the challenging section. We call it secondary variances. The secondary variances. That is where the challenges are. Can you take note of this section? I'm going to claim this one and start from number 4 from here and run to the down one. I sign off. Okay, so let's go to number 4. All issues about variances. Number 4 talks about the secondary variances. Secondary. Yes, second cycle. Combination. So number 4 talks about secondary variances. Now the secondary variances are plenty. The first one we look out for is A, mix and yield variances, with and without losses. Mix and yield variances. Mix and yield variances. Don't forget that we can also have sales mix variances and sales yield variances. So you can also have material mix and yield variance and sales mix and yield variance. It's about sales. So here it's under into bracket material. I want to be specific. Material and sales. So the examiner can tell you material mix and yield variance. Sales mix and yield what? Variance. That is all. Let's go. So under secondary variances. Number 2, we have what you call planning and operational variances. Kindly watch out for that. Planning and what? Operational variances. Planning and operational variances. That is a secondary variance. Now, the number 5 is the stubborn ratios. They are not stubborn. So, no one is stubborn. And then you should know the theory about them, what causes the variances. So that one you should know. And I've gathered them in our material. I think the latter part of it, I put them there. Those tables should be part of you. Where is that table? Let's look at that table. Let's look at that table. It's in the material. That table is in the material, the latter part. Okay, here is it. So causes of the variances. We have general causes and we have specific causes. When the examiner asks you the causes, you can bring it from anywhere. So these are the general causes and specific. This one is part of you. You can be then ask you what cause material makes favorable variant. What can cause that? I think it's a past question. That is it. That's the theory section. So you should know that. Number 5. You should know how to calculate the following ratio. Efficiency ratio. Number 5, we need to calculate the following ratios: efficiency ratio, capacity ratio, and what you call volume, production volume ratio, or we also call it productivity ratio. The question which is under which is called Ghana gas. Ghana gas. That's the question under review. Ghana gas. All of them are in the material. Good. The last aspect you need to look out for is a theory. The causes of the variances, specific causes. The examiner will be specific. Even if the examiner is specific, tell the examiner, they ask you what are the causes of what? Labor material price variance. You can, if you're forgetting about this, don't worry. These general causes run through all of them. Inappropriate standard is could be so. Material price, maybe the standard material price is inappropriate. Inaccurate recording of the actual cost. Yeah. Random event, COVID-19 can change things. Random events, COVID-19 can cause a massive favorable variance in some of the industries. It can also cause what? Massive adverse variance in some of the industries as well. Operating inefficiency, hiring of what? Semi-skilled laborers. You hire workers that do not have like efficient skills to do the work. They'll do a short work for you. It runs through all of them. These 4 points runs through all of them. So make sure that you get them correctly. This table and these sections are for your use. Let's get this table very well, and then that is all. So these are the sections that we need to look at for. Yes, after I will show you the Ghana gas. Let me go to Ghana gas. It's in the variance questions, the questions on variance. That is where you can get the Ghana gas. Ghana gas. I'm getting to the end of the questions. Ghana gas. Okay, Ghana National Gas, so Ghana Gas Company. I like that question very well. So take note of that. This is a question. Ghana National Gas Company. Requirement: efficiency ratio, capacity ratio, production volume, or activity ratio, or productivity ratio. Take note of this. All of these, they are similar questions coming from our session. Okay, so basically, that is it. So I'll pick my first question on the primary variances. I have to copy them up to raw state. All of them, they are supporting material. Let me walk you through the supporting material too. With the recorded material that you have, if I'm going through, kindly go by this. The first section here talks about the part 1 and 2 talks about the explanation of the variances. And then the part 3 for the full calculation. Part 4 talks about solve the examination question. ICMA 2017. This is a operating statement question. That question was operating statements. And the continuation is here. The mix and yield variances are in there. Planning operational variances are also in there. So if you're using this These ones are very short. You finish just now for it to move on. So let me pick my first illustration question on that, and then we are done with the game. Great. Now let's look at this particular question. Here I'll be extremely fast. Calculate all the ratios. So I used to prepare the operating statement. So before you prepare operating statement, we need all calculated ratios. So first, I'll calculate the ratios, all of them, all the possible ratios. I see the ratios and all possible variances. That is all. So let's start. So I'll start the material. So for material, I'll calculate the material price and use a variance. When you put the two together, it will give you material cost variance. Then that is end of the game. I'm not going to everything about material. I'll start with the material cost. So first, calculation of variances. Keep the formula or the format short. But there's a formula base, just that we normally move with the principle behind the variance. So okay, so we'll start like this. Material cost variance. I'll start with number 1. 1A, material cost variance. Now, if I say material cost, this I talk about the total. That doesn't mean expected, actual. Keep it simple. So what would be the expected material cost versus the actual material cost? And then you find the difference. The answer that you get is what? The variance. That is all. Expected against the actual. The difference you get is the variance. Keep it short. Let's start. Expected. They have to give us the standard cost card for material. So let's go to the question. Per their standard. If they want to produce a unit, what will be the material cost? So, in short, to calculate the variance, keep it short. Expected versus actual. The difference is the variance. That is all. Expected versus what's actual. Good. Let's look for the expected. Now, to look for the expected, then, pick from the standard, per the standard, per our standard. If I want to produce 1 unit, what is the material cost? What is the material cost? Oh, it is 10 CD. Okay, then if it is 10 CD, now, if I produce 1, it will be 1 times 10 CD. If I produce 2, 2 times 10 CD, then multiply by the actual production. So the actual production times the standard material cost should give me the expected material cost. So per my standard, if I should spend 10 Ghana cedis and now I have produced 10,000 units, oh, then I must multiply the 10,000 by the 10, getting 100,000. So let's go to the question. Now, in the place where the examiner will read the question in a story form, can you draft it in this form? I'm begging you. If the examiner presents the question in a story, it has not been arranged like this. When they give you the question, make sure that you know the demarcation. In the question, locate this, is very important. Separate the standard details. So they'll give you a standard information, right? A standard here. All the information that form under this is for the standard. And I'll come and write actual also here, and that's all. If they don't want to write actual, we write in period 4. in period 4, in month 1, in week 1, in day 2. When I say day 2, meaning the actual, not standard. Good. So in this question, I've done everything in here. So standard cost card. And then from there, they go to the actual. They say the actual results for June 2007 were as follows. All of them are in here. How we get it? The first one. So let's go straight. So let's go to material. Tell me the standard material cost per unit, not material price. There's a difference between price and cost. So this is the 0.5 kilos becomes the usage, standard usage per unit. And then the standard material price is what? 4 Ghana cedis. When I multiply 4 by this, I get 2 cedis. So the standard material cost is what? 2 Ghana cedis. Kindly make sure that you know the clear distinction between these 2 cedis and the 4 cedis. One is cost and one is price. They are not the same. Cost means you have multiplied by the requirement or by the unit required or by the usage. How we get it? Now, per our standard, if we want to produce 1 unit, we must spend 2 Ghana cedis on material. That's the interpretation. And that 2 cedi, we had it because we need to use 0.5 kg. And each kg, the price is 4. So putting them together, we have the 2 Ghana cedis. If you don't understand it this way, we might find it difficult to interpret some of the variables. Okay, now let's look at this. Now, the 2 cedi is per the standard. So per our standard, if you want to produce any product, a unit should cost us what? 2 Ghana cedis. So let's go to the actual data. This is the actual data. So from here coming now, our actual data. So actual production unit was 4,850. So if I should spend 2 Ghana cedi. Now I have produced 4,850. What will be the expected material cost? Or how much it should have cost us? Are we saying how much it should have cost us? This 4,850. So let's go. So you multiply the standard cost by the actual production unit to give you total expected material cost. So let's go. So open a bracket. Expected against actual. That is the preamble that we are going to use. So write it here like this. Open a bracket. So tell the examiner 4,850 that they produced times 2 Ghana cedis, and now give us liters must be in. So this one 100,000, 6,007. That should give us 8,000, 9,700, right? Go 9,700 cedis. Then what is the actual? The examiner actual cost. Actual, or it did cost us. Let's go and pick the actual cost from the question. The actual material cost, the material consumed production at a total cost of 9,800. So 9,800. Tell the examiner it is 9,800. I hope you get it right. It's 9,800. Okay, so let's put it down. 9,800. At the end of the day, tell me the variance, if possible. Variance. The variance will be 100. Average 100. Adverse or or favorable, and why? Will it be adverse or favorable? Friends online, confirm for us. Now, it is adverse because you should have spent 9,700 cedis in your production, but you did spend what? 9,008. So you spend more by 100 cedis. So right here, A, capital A, that's all. Exactly, more than 700. That is all. It's an adverse. Then B, this can be translated into 2. This is the cost. It's made up of 2. It's made up of the price and usage. I did this for illustration. In exams, go straight and calculate the price and the usage. That is all. If you do this, that means they want to play smart game on the examiner. Unless they ask you, I'll explain further. I'll go to material price. Material price variance. That's the next one. In fact, that should be the first one that you calculate. Material price variance. Please and please again. That one is about price though. Ring the price. So now one is about the material price. So all what you're going to look at for is about the price. That's all. Also, don't worry. Keep it short, keep it simple. Tell the examiner, expected. Again, tell the examiner, actual. Again, tell the examiner, variance. Then you are done. Have you seen the game? Don't change the format for the game. Let's go and look at the expected. So here's about the price. So look for the standard price. The materials that we have used per our standard, how much we should have acquired them. That is all. This one deals with the price. So the material that we have consumed, we bought some materials. Per our standard, we should have acquired them at 7 Ghana cedis. So therefore, per the standard, how much we should have paid? Or we should have paid 10,000. Then how much we paid actually, so that we compare and then find a variance. So let's go. So in that one, the material price, pick the standard price. So the standard price becomes 4 cedis, not a 2 cedi. The 2 cedi is the standard cost of material, and the 4 cedi becomes standard price of material. There's a difference. Okay, so 4 Ghana cedis. So if you want any kilo that I want to buy, I should pay 4 Ghana cedi. Let's see how much they paid. Or let's see the material that they consumed. Now the same material consumed in the production amount to 2,300, the total cost of this. So the material is 2,300, that's what they've consumed. Now this 2,300 that they have consumed, we should, per the standard, how much we should have paid? Per the standard, how much we should have paid? Per the standard, how much we should have paid? We should have paid 4 cedi each. That is all. I hope everybody gets it. So per the standard, we should have paid 4 Ghana cedis. So pick the actual material, 2,300 kg, times the standard price of 4. It should give us the expected amount. That should give us 9,200. Agreed. So expected. So the materials should have cost us 9,200. The entire material that we acquired. So let's go to the actual. How much did you pay? That's what I see here. The actual material cost still the same. Carry the actual. We pay what? 9,800. So what is the variance? What is the variance? So what is the variance? But let me shift this one here small, do something. Let me shift it here small. This one is 9,200. This one is 9,800. The variance is what? 600. Adverse or favorable? That will be adverse variance. Okay. Good. I'll take that. Now, what happened is this. I'll calculate another one again. Because of this, I'll do it, okay? B. So this is C. I'll calculate material price, material usage variance. Material usage variance, the usage variance. You know, the material cost is divided into two. So material usage variance. That one will compare, it's about usage, so bring the usage. Now, it's compare the standard, we compare the standard usage versus what the actual usage. Per your standard, per your best practices, per your past actions. Always on average, when you sit, 3 balls of Cancun should go before you stand up. I will get it. That's the usage. But this time around, you don't know what happened. In fact, if you want to cry, you can't even finish it. So that means the usage has what? Gone down. Now let's translate it into this. So you compare the expected material usage. So always tell the examiner expected. That one deal with the usage. So we write the material, the unit. So it's in kg. Normally I put kg here first. So expected. So what are the expected material? So per the standard, if I want to produce 1 unit of the product, how many kgs of the materials do I need? So basically, if I want to produce 1 kg, sorry, 1 unit of the product, I need 0.5 kilos. So if I produce 2, I need 1. If I produce 10, I need 5 in that order. Now, what's the actual production unit? The actual production is 4,850. That means how many kilos I should have used. That is all. How many kilos? Per this 4,800. My standard is telling me that I should use only 0.5 kilos for each of the products. And now I have produced 4,850. So how many kilos I should have mixed together? That is all. So multiply. So half of 4,850. So that examiner, 4,850. I should have used this. So half of this 25,402. So 2,425. Agreed. 2,425. So I should have used what? 2,425. Agreed. Friends online. Agreed. And then I will compare this to the actual materials that I have used. The actual material, I have to go and pick it up from the question. Don't forget the story. The actual material consumed in the production amount to 2,300. So now 2,300. So I have to put 2,300 here. So what is the variance in terms of kilograms? It will be 125. Adverse or favorable? So 125. Normally I put kg here to remind me which of the price I should use. It is favorable, quite favorable, because we have used lesser input, lesser material than expected. So it is favorable. I normally put the kg there to tell me which of the price I should select. But if your kg is here, it's saving. Now, let me give you a secret. Anytime you have a unit and you get price to multiply by, can you select the standard price? That's one point of the trick. Here I have the unit, 125 units, that's the variance, or 125 kilos. So I need to pick a standard price per kilo. Standard price per what? Per kilo. That is all. So let examiner. Standard material price per what? Kg. Go and pick that one. Standard material price per kg. Let me put it here. Standard material price per kg. Let's go to the question. What's the standard price? It's 4 cedis. Standard price should be 4 cedis. Yes, the standard price per kilo is 4 cedis. So 4 Ghana cedis. So 4 cedis should be somewhere here. Write the cedis nicely. Now, what is a variance in monetary form? So variances usually are reported in monetary form. So the variance in monetary form will be 500 favorable. Okay, that is it. Now, if it is 500 favorable, if you add the price and that of the usage, it must give you what? The cost. How do you get it? Is a cost. However, in exams, we are interested in the material price and usage. Exam don't calculate this. The top one don't calculate this unless the examiner requested you to do so. If you have not been requested, don't calculate that one. I did it here for you to see how it will be. Even if they ask you, go ahead and do this and sum them up, sum this answer together, you still get this. Now, you should know the causes of the favorable and unfavorable side. All of them are in the material, so I'll not talk about it. Kindly read about it. For instance, over here, sometimes there will be trade-off. Yes, there will be trade-off. Because if you are the type that normally you like, if for this one, they show you it's an adage that if you like roadside food, cheap roadside food, you always pay with your stomach. Yes. So company that like cheap raw materials, they will end up using more than they're supposed to. So we check here. The price was adverse, meaning that the price were higher than expected. So it means that either they've acquired quality materials, quality comes with price. Perfect. And in terms of quality, it has helped them save. So, which has translated into the usage. Quality materials, you don't need to use plenty, small one penna. You get plain, you are done. All like the other people, their things are within the other country. This plant within some short time. So because the materials were quality, the usage became what? Favorable. Unfortunately, the bad or the adverse in the price outweighed the favorable in the usage, and hence reporting the final or the overall material cost variance, leading to the variance, adverse variance of what? 100. Have you seen analysis? Good. So that is it. This is what we're expecting from you. I'm done with the material. I am going to labor. If you don't have a question, you kindly ask before I go there. And the next one I'll not provide the detailed analysis. I'll go straight to their types and then move on. And you should do this for all the heading that I give out. Make sure that for all the heading I give out, you have a deeper understanding on them. Can you try them for me? Okay, so let's see. I'm going to number 2, my variance 2A, labor rates variance. With labor rate variance, don't worry yourself. It's the same as material price. Good. So that examiner expected against actual. So that one, the rates, pick the standard rate and multiply by the actual hours worked or the actual hours paid, and to give you. If there's idle time, take note. For instance, here, let's go to labor. The wage is 2 hours at what? 2 Ghana cedis per hour. So the standard rate is what? 2 Ghana cedis per hour. So let's go and pick the actual hours and then multiply by it. So it will give us the expected hours, expected amount. The labor hours paid for amounted to 8,500 hours. Actual operating hours amounted to 8,000. Meaning there's an idle time. Yes, there's an idle time. Anytime whatever you pay is more than the actual operating hours, there's what? Idle time. Why idle time? Like during break hour, like machine repairs. So lunch time, break time, all these amount to 500 hours. So look how you're going to calculate it. Okay, so expected will be these 2 cedis, this 8,500, they pay 16,800. Per the standard, how much they should have paid for this 8,500 hours? They should have paid 2 Ghana cedis per hour. So let's go and calculate it. So it should be in bracket 8,500 times 2 Ghana cedis. Let the examiner, this will give us 17,000 Ghana cedis. What's the actual amount paid? The actual amount paid. Okay, so let's move on with the actual amount paid. Now the actual amount paid happens to be actually about is 16,800. We pay for the 18,500. Per the standard, we should have paid 2 Ghana cedis per hour, but we're not paying what? 16,800. So we had what? 16,800. So there is a variance of maybe 200. Friends online, what is the variance? Okay, so there's a variance of I'll do the second one. So variance will be 200 favorable. That is all. Now let's go to labor idle time variance. And then I'll do the efficiency variance. Idle time variance and what? Efficiency variance. I'll go to the efficiency and then do idle time. Okay, so B, I look at labor idle time variance. Idle time variance. That one is always addressed. It will never be favorable. That is the time spent by employees to probably relax themselves, go for lunch. It is not a working hour. So that one is equal to third examiner. The hours paid, so hours paid versus the actual operating hours. So third examiner, hours paid. The hours paid is 8,500. Actual operating hours. Operating hours is 8,000 from the question. So there's an idle time of what? 500 hours. Then you multiply by the standard labor rate per hour, which is 2 Ghana cedis. So therefore, labor idle time variance happen to be 1,000 Ghana cedis. I am done. Should be 1,000 Ghana cedis. Good. Should be 1,000 Ghana cedis. Then I'll cover the efficiency variance at the other side. So let's go. Efficiency variance. C. Efficiency variance. Now, efficiency talks about the hours worked by the labor. The labor hours worked, that is the efficiency. Labor hours worked. That is the efficiency. So labor hours worked will be the expected hours that they're supposed to spend on the job, and versus the actual hours. It's the same as the material usage, but like I said, we don't use human beings or labor. Yes, we utilize their inputs or just their efficiency. I want to start by saying expected hours. So expected hours should have been, so expected hours. Expected hours. So what will be the expected hours? Let's go to the question. Now, each unit, they're supposed to spend how many hours? 2 solid hours. So now, if they are going to produce 4,850, so how many hours they should afford spend? That is all on the working time. How many hours? So if each unit, they should have spent 2 hours. And now they've produced 4,850, then they should spend 4,850 by 2. And that'll give us something like, so that's the expected hours, 4,850 by 2 hours. And that should give us 100. 1,000, 6,000, 7, so that would be 9,700 hours. So 9,700. What's the actual hours spent on the job? The actual hours spent is 8,000. Actual hours spent is what? 8,000. So the variance in terms of hours. But here you need to pick, there are 2 types of hours here. We have the actual operating hours and what? Hours paid. Can you pick the actual operating hours. Kindly pick the actual operating hours, not the hours paid for. Pick the actual operating hours. Take note of that. What is the actual operating hours? We pick that 8,000. So the variance will be 1,007. That's hours. Multiply this one by standard labor rate per hour, which is 2 Ghana cedis. So I'll give her 3,400. Will it be adverse or favorable? In fact, this will give us favorable because we have used lesser time than what? Than expected. So favorable, put favorable here. Put Ghana cedi here. Put variance here. Again, you can analyze. Now, the price is favorable. The usage is also favorable, despite an idle time of what? Of 500. That is it. So basically, that is the game. So you continue calculating all these variances from it. Don't stop here. And we'll look at it from there. Right from there, we just prepare the operating statement. So that unfortunately for us, but this is how far the good Lord will bring us. To meet again in our next meeting period. In our next meeting period, I'll just have to pick questions under each of the category, the 5 categories that I gave. Which question solve? So kind of complete this one. Everything has been worked out here. We've calculated all the variance. Go through how we calculated it. Especially when we meet again, I will explain the fixed section, the fixed cost sections. And then the operating statements, how to prepare the operating statements. Fix the absorption and then under marginal cost system. And then the selling price variances. And this is back, deriving the actual data or the actual standard cost from the other. So you should know, especially here, if you are looking for this actual, the standard price or the standard rate per labor, how do you get it? With the help of this variance. So you work back, set a table like this and be working back. It's so easy. All of them, we do have a sample on it in our lecture videos. So let's only use that. Okay, so on that note, we will end here for now. Continue again. If I have any question, can you ask? Don't end you, can you finish the entire program? So when we meet, we'll pick questions and then solve. Good. If you have no question, then we'll end here. Good. Kindly subscribe to the page if you have not done that. Kindly subscribe if you have not done that. Okay, so I'll see you when I see you. This is the program line. For those who are coming for the intervention in person, make sure that I get a list before Sunday. Yes, to make an arrangement. Then what happened? Next week, we'll start the intervention for FR. We'll still be having our man accounting class on Tuesday and Thursday to end the entire game. So that on Friday, the man accounting intervention starts on Friday. Man accounting intervention starts on Friday, next week Friday. And then we'll come on Friday, we don't come again and meet on Monday to finish it. On the same day, Monday, I'll now leave Accra to continue the intervention. So that is it.